Folks, we're going to talk about the Great Rotation Theory. Now, unlike the Great Replacement Theory, this one's not racist. It's just rotating money from one asset to the other. So let's talk about it. What is it? Well, it's the theory that as gold dumps, Bitcoin will pump. Gold is a safe haven asset. Bitcoin is a risky asset, so, as one dumps, the other goes up. Is this theory valid? Because gold recently was at an all-time high. It did dump a lot today, and theoretically, some of that money was supposed to come into Bitcoin. But there's a lot of problems with this theory. I don't think the money is coming into crypto. I think it's either going to either stocks or bonds. Because, let's be real now, the interest rate is still pretty high despite an upcoming cut and probably 2 cuts this year. And interest rates being like 4% or so is still pretty lucrative to like bond buyers. And crypto, I think it's gotten kind of a bad name with the complete lack of regulation the last year and the increased amount of grifts and scams, including the presidential grift of Trump and Melania coin. So I think people are not too looking too good on crypto. I mean, we in the crypto industry may not notice it, but more and more people out there over the last year are saying crypto is a complete scam. Now, obviously, that's behind the backdrop of that Bitcoin is actually getting more adoption by financial services, but a lot of people are seeing the kind of like the difference between Bitcoin and the rest of crypto. They think Bitcoin and ETFs are fine. The crypto market, especially like, some of those perp dexes and the leverage stuff, definitely not, because the manipulation has been getting worse and worse as the leverage has gotten higher and as pretty much every agency that was supposed to enforce these rules have basically been shattered. The enforcement part of the SEC has basically been disbanded as the crypto enforcement part of the DOJ. And despite what rules you might have, rules don't really matter if there's no one to enforce them, because if you don't have anyone to enforce your rules, no one's going to follow your rules. Pretty simple concept, I would think. So let's actually take a look at some charts in terms of gold and Bitcoin, because I think you'll find these rather interesting, and I don't think you'll see that gold and Bitcoin really have too much relation, all that in terms of money. Now, gold has actually been going up this year, obviously. If you look at the 1-year chart, it's up 50%. Bitcoin has also gone up on the 1-year chart. Let me look at BTC Cointelegraph. And as BTC goes, the rest of the crypto market goes. So we're just going to use BTC as a representative of the crypto market. If you look at a CMC for the 1-year chart on Bitcoin, it has definitely gone up on 1 year. It's up like 60 something percent, but it's not like a straight line like gold right here. Whereas it's really, really choppy, and it's currently in a downtrend. But remember, we started this year, we started the 1-year graph like last October at around $67,000. So at 108, we've actually over the last 12 months, we've actually gotten up slightly more than gold. So if you superimpose one of these over the other one, they more resemble each other than really basically are opposite of each other. And you can look at by today's movements, because today gold went down and today Bitcoin also went down. So obviously the money coming out of gold is not going to Bitcoin. So that theory has to be shattered, both on the 1-year timeline and on the 1-day timeline. Obviously you can find some timeline where they match up, but that's just picking and going. And realistically, there's very little correlation, if any at all, between, or very little causation between Bitcoin going up and going down and whether gold goes up and goes down. Because gold overall is looked at as a reserve asset. And Bitcoin, itself, is also getting to be a reserve asset, although it's a lot more speculative. The rest of the crypto market is a speculative asset, but it's also kind of a newer market. And there's always a lot of gamblers in crypto. And I think most of the people that are still in crypto are those gamblers. They're not like the long-term investors that kind of like gold and other more established assets have, because those people don't really want to deal with the gambly nature of crypto. Two, I don't think those gold investors are really getting out for the long term. They're probably just taking some profits. I mean, gold up 50% over the last 12 months. If you look at just like the last 1 month, it's still up 9%, up 6 months, 20%. And gold investors are not looking for 5, 6, 10x gains like crypto investors are. They're kind of satisfied with, 20, 30% gains. So it's much more likely that they're actually taking some profits, and they will come down later once gold has a little bit of a pullback, which it has. Now it's 4,127 at the time of this recording of this video. Dropped about $300, $350, which isn't really all that much. We've had little bumps like from here and here as well. So we've had some ups and downs. If you look at May 6th, 3,400. It all went down all the way to 3,100 on May 14th. Although we haven't had a one-day drop that's quite as big as this one, over like a couple of days, we've actually had this kind of drop before. And I still think gold is going up because gold runs exactly inverse on people's sentiment of the economy. And Bitcoin doesn't really run inverse, and it also doesn't run directly according to. Now, the reason I don't think gold is going down in the long run or anytime soon is because I don't think people's sentiment of the economy is going to get better anytime soon. There's too much uncertainty within the market right now. You have Trump's tariffs, which they don't even know if they're going to be legal or not. The Supreme Court's probably going to rule out on that before Thanksgiving. Trump's new tariffs, which they also don't know whether they're going to come before November 1st or not, how severe they're going to be. Trump's future tariffs, because he's already done this twice, so anyone can guess no one can guess with these tariffs what he's going to do in the future. And of course, all the ongoing tariffs and duties that he has with other countries. And of course, there is the prospect of some of those countries, especially not the more not so friendly ones, basically punching back, as China has actually done. And Trump's shifted his tone on China multiple times within the next few days. So people don't really know how that relationship or how that so-called talk, I guess, is going. So markets aren't really settled. And I think inflation is still going to be a factor. Luckily, the gas prices and OPEC producing more is keeping inflation down, but they're really only doing that to try to kill both Canadian tar sands oil production and American shale oil production, because those things are very, very expensive to do. And if oil drops below a certain price, it will be unfeasible for those companies to actually operate. So that's what they're doing. Once and if they decide to decrease that production, prices will actually come up. Also, global demand is down because of the uncertainty that the trade war is essentially generating. So more or less, it's a combination of OPEC's production and also basically Trump's trade war, that oil is down. But you're basically bringing down the world economy more or less to bring down the price of oil. And I'm not really sure if that's a good trade-off or not, because several large corporations also have overseas sections, and those profits are probably going to come down. You also have the weakening labor market, the advances with AI that are making some people nervous. So people are just very unsure of the economy. Plus, you have the government shutdown that could end up being the longest one in history. The longest ones up to now was under Trump's last term, and that was 35 days. And it does not look like either side is willing to compromise. Even if the GOP is willing to compromise, so I don't think they are, Trump is not willing to compromise himself. So we could definitely be stuck in this a while. Plus, extra federal layoffs definitely could make some people nervous. Now, most people have not felt any difference in terms of the government shutting down, because most people do not work for the government. But I think as you approach the holidays with holiday travel, you're going to see a lot of people feel the effects, because obviously with the FAA and stuff, flying is going to be not as safe and obviously a lot harder with the government shutdown. So people are still nervous about that. People are definitely still nervous about that. Now, some people are asking why is the water still running? Why is this? Why is that still running? Remember, a government shutdown only shuts down non-essential sections of the government. The post office operates independently, so the mail's still delivering. And several essential infrastructure and other departments are functioning as well. So the shutdown only affects the part of the government that's non-essential. That's why a lot of the essential services are still running. But it all adds up to the uncertainty, and that's going to continue to make gold go higher and higher. Now, the thing is like, well, if people are going to sell gold, the safe asset, would they buy non-safe assets? I think the answer right now is no. It's because of the economic sentiment, and it's also because of one is economic sentiment, obviously. The other is basically like these people that buy gold might be the safer investors, and they might just rotate into other safe assets, i.e., bonds. And also, there's the stock market, which does definitely have its shady components, but is not quite as shady as a whole as crypto, because it is still way better regulated with the SEC. There are more established rules and norms, and it's definitely not really a free-for-all like crypto is, and like crypto will be for at least the next 3 years or so. I mean, I think a lot of the crypto industry guys, basically when they say we want regulations, they basically are saying we want really loose regulations, which is kind of what we have right now. So I don't think that's actually going to improve. And the guys that buy gold I think are definitely more safer investors, and they're not likely to invest in a market, especially with today's market conditions, that is exactly opposite of gold. So if they rotate out of gold, they might do, I would guess, bonds first, stocks, and also real estate. I think those three are going to absorb gold's money. If gold actually really starts to dump, which I don't actually think it will, I think those three are going to absorb gold's money, and crypto would be like the fourth and last one to absorb that money. Now, if money comes out of bonds, I think that's much more likely to go into crypto. But right now, that really hasn't happened. And if money comes out of equities and stocks, that also is more likely to go into crypto than gold. So, no, I don't really believe in the great rotation theory as of right now because of the economic sentiment, because of macro conditions, and because I don't think crypto is the asset that these gold investors would actually go into. I think it's much more like real estate or bonds. And next year when the interest rate actually comes down, and if people's investing sentiment gets better, then I can see some of that money going into crypto. So it really depends on the macro policies, the country policies, and if people actually get more confident. So that's my theory. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.